Hi, I'm Jimmy. In this video, we're going to look at Pfizer stock, ticker symbol PFE. We're doing this video because over on our Learn to Invest Shorts channel, where we do quick valuations of different companies in less than 60 seconds, that's what we mean by shorts, well, we did Pfizer's stock over there, and it seems like it could be undervalued today. And then with the recent FDA approval of Pfizer's COVID vaccine, well, this could make Pfizer's stock even more interesting. Okay, so let's jump right in. So first, we're going to start with a quick review of Pfizer's business. Then we'll look at the fair value of Pfizer's stock and see if it's worth buying today. Okay, so Pfizer creates medicines, medical devices, consumer healthcare products for things like inflammation, oncology, cardiovascular, and a few other areas. Plus, a big one is the COVID vaccine, obviously. And clearly the Pfizer vaccine is a huge driver for the current stock price, as well as a driver for their revenue, their profit, their free cash flow. Now, one of the important things that we should notice when we look at a chart like this is that Pfizer's business is clearly well diversified. They're all over the place, but they are constantly losing patent protection. In fact, this is a list of different patents that I've been able to find, along with when those patents expire. So Pfizer's and any pharmaceutical company is constantly going through doing R&D, trying to replace the ones that they're losing, perhaps trying to acquire new products that could, again, generate big revenue over the long run. Because at some point, everything that they have eventually expires. This is one of the tough parts of the pharmaceutical business. But right now, clearly the hot thing is the COVID vaccine. So now let's look at how this is influencing their numbers. Okay, so first we've got Pfizer's revenue. So the purple bars are Pfizer's revenue. These are actual numbers going back the past 10 years. And clearly, coming out of 2020, the trend was generally downward, or at least disappointing. But then Pfizer comes out with the COVID vaccine, and clearly that has a huge jump in the projections for revenue going out the next few years. Although they are expecting for those numbers to gradually taper off in the coming years, which makes sense. I would imagine 3 or 4 years from now, there's going to be less of a need for the COVID vaccine than there currently is. Okay, how about free cash flow? And now when we jump over free cash flow, we can see a very similar story. Their free cash flow has gradually declined over the past 10 years, and we can see that analysts are expecting a temporary pop in Pfizer's free cash flow numbers going out the next few years. Now, clearly, this is going to have a huge impact on our fair value calculation when we're using something like discounted cash flow. So, when we switch over to our discounted free cash flow calculation to come up with the fair value for Pfizer stock, well, we take those very same analyst estimates up here, discount them back to today, and this gives us a value of the entire company of about $61 per share. We then want to adjust that calculation for net debt, so debt minus cash. We take that away from the company value, and we end up with the fair value of just the stock of about $58 per share. And basically, what this means for potential investors of Pfizer stock is that what we're saying is that if Pfizer is able to bring in these free cash flow numbers, or something close to those numbers, and given how much revenue Pfizer should be able to generate from the vaccine, well, I think that it's very possible that they do, in fact, hit these numbers, perhaps beat them, or at least come close. Well, if this does happen, and assuming that they are able to grow free cash flow on average 2.5% per year after that, that's what the perpetual growth rate means. Well, if they're able to do that, the stock should be trading at about $58 per share right now. Well, when we switch over to a chart of Pfizer stock, well, we can see that even with this huge jump in Pfizer's stock price, well, Pfizer stock is still trading below $50 per share. So, assuming we agree with the fair value calculation of $58, well, this implies that the upside is a bit more than 20% right now. But here's my problem with Pfizer today. When we go back to their free cash flow numbers going back the past 10 years, well, we can see that over the past 10 years, the free cash flow numbers haven't really gone anywhere. In fact, if we go back a little bit further and say the past 15 years, even that, they haven't really gone anywhere in the past 15 years. So what this realization has done for me is it makes me question our perpetual growth rate. Do we think that Pfizer will continue to grow at approximately the same growth rate as and rough estimate of what the broader economy should do or at least over the past 10 or 15 years, if we look at those numbers, they haven't done it. So they're not instilling a ton of confidence that over the next decade or two, they'll be able to grow by 2.5% on average per year. So as good as I think the Pfizer vaccine is for their revenue and for their free cash flow, at least over the next few years, I'm just not sure it's sustainable beyond that. Now, of course, I do think it's important to point out that Pfizer does also pay a decent dividend. Right now, they have a dividend yield of just over 3%, I believe. So for dividend investors, this is quite a good thing. Now, Pfizer and companies like Pfizer, pharmaceutical companies, tend to be defensive companies. They're in a defensive industry. So this can be a great diversifier to a portfolio. If the stock market, if we would enter into a bear market, pharmaceutical companies like them tend to do fairly well, or tend to hang in there better than a lot of the other companies. So again, that could be a very good place. If we own Pfizer stock, that could be a great reason to hold it. They also have a decent stock buyback program, so they might also be able to grind up the price of the stock that way. So between the dividend and the buyback, it is very possible. If I owned shares of Pfizer today, I would probably just sit on it and sit there and collect it and let it be a defensive position for my overall portfolio. But if we're looking for a long-term buy and hold stock, ideally a stock that will give us some growth and add some good performance to our portfolio, I'm not sure Pfizer is that stock. So for me, I'm going to avoid this one for now. Now, if you're curious what stocks I do own and where I bought them, well, I recently did a video where I go through my personal investment portfolio. So perhaps that's a good next video for you to watch if you're curious. I got a link right here. I got a link in the description below. And thank you so much for sticking with me all the way to the end of the video. I really appreciate it. Thank you, and I'll see you in the next video.